Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Excuse me. Welcome to this March 9th edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We got a really jam-packed show for you folks today. Two guests for you. Our first will be 8:15. That is Chris Irons from Quoth the Raven Research. If you follow him on Twitter at QTR Research, you know he's all over that platform. He's going to come on and talk about his very bearish thesis on Herbalife and the future that he sees for that company. And then at 8:35, we're going to be joined by Chris White. He's the founder and CEO of EdgeRater. But before we get to those guys, we got to get to our movers of the morning. We're going to talk about the key reversal yesterday in a few financial stocks. And Joel's going to tell us how we're doing on the S&Ps.
S&Ps, and we got to mention crude here, getting a two-day beating, now under $50. Crude futures down $1.20 here. This is basis the April contract. Just been in a trading range. We've been talking about it. Finally broke out of that trading range. Now you're in a vacuum area here. Man, down to the $45, $46 area. I don't know if we're going to get there today, but ugly move in crude, and remember how the market reacted last January and February when crude fell out of bed. Basis, the S&P futures tried a little bit of a rally overnight, could barely get over the daily pivot and Tuesday's close. We are bearing down on the low from yesterday. We've actually taken it out. 58.75 is your current low. Not much here until you get to 23.49.50. Gold and silver in the red, too. Dennis, how you doing this morning?
Doing good. Looking at the same thing you are. That's the big thing jumping out on my screen here this morning. Is crude way down here again after getting the beats yesterday? You're right, down again. The equities, too, are getting the beats as well. I mean, look at a stock like ConocoPhillips yesterday. It lost over 2 points from 48 to 45.91. It's down another 70 cents here in the pre-market, so another 1.5%. And those people who are thinking, oh, crude and long consolidation period, maybe eventually going to break out or maybe hold, on to the $50 level, are scrambling here right now because this is a pretty hard hit.
All right. Before we go any further, Spencer did a bang-up job trying to settle our wager from last Friday.
Oh, the market bet.
Yeah,
the
market bet
would close green.
Yeah.
And you're trying to say, well, the S&P futures closed by a tick red.
So
let's listen to it.
All right, we're gonna play the clip. Just play, Joel.
This is for Johnny Lechner.
Yeah, all right. Yes. All right. We'll play the clip.
Here we go.
Let's see if it's working. Let's see if it's playing. No. Okay. Well, the point is, conversation was framed in the S&P futures. Joel was saying, I listened to it like 4 times yesterday, and I'll throw the link in the chat. Joel, you can just pause it. So,
okay.
But I'll throw the link into the chat. Joel was saying that 2,300 wasn't much of a whole number of a hurdle for the S&P futures. 2,400 though, and then that's how the conversation started. So the conversation was framed against the S&P futures. It was never quite specified in the next minute of discussion what we're talking about, but it was it was framed against the futures, so that's what I'm going to go with.
I don't know, because
I'll throw the link in the chat.
Specified, because what happened was, the bottom line is that the SPY closed green, but the S&P futures closed red. We all know I use the SPY. I don't like paying for S&P futures quotes. So I use the SPY now. I don't use the S&P futures as much. So when I say the market, I mean the SPY. When Joel says the market, he means the S&P futures. One closed red, one closed green, and the lunch is dependent on this. So I don't know if I'm just going with how it was framed, because we know I always like to talk the SPY.
All right, well, the link is in our chat. And it's queued up to the spot.
Decide. This is important because it's a lunch here, so
SPY
still to be determined because it wasn't clearly specified.
But SPY was
you
never
always give me a technicality, so
SPY was never mentioned. SPY was never mentioned. I'm down to only owing you 2.
Joel says he wins.
All right.
I still got to come and get that Shake Shack burger. So I'm telling you, when the Lions come down at Shake Shack in Detroit, you let me know. And I'm coming over there and obviously eating Shake Shack for lunch.
All right, we got a lot to talk about before our first guest here at 8:15 here, Dennis. I guess the financials were the big story from yesterday.
Yeah, key reversal in a couple of these, and actually almost all of them. So JP Morgan, and a key reversal actually when the stock makes a new high on the day and then makes a new low on the day. You can say it reversed. So, we did see that in JP Morgan where it took out the high and took out the low. And obviously they were very strong off the hop. These stocks were popping, hints that obviously, the hot jobs number that interest rates are probably going higher. But profit taking ensued. And about 20 minutes after the open, they started to give it back. And not only did they give it back, then they all ended up going red. And some of them closed heavily in the red. Goldman Sachs with a key reversal here as well. Kind of felt like a little bit of a turning point there. JP Morgan, Citigroup didn't, or JP Morgan did. Citigroup, Bank of America did not actually have the key reversal, didn't make a new low on the day, but they came close. And it looks to me, and a lot of these actually, Bank of America did not make a new high on the move yesterday. JP Morgan didn't even come close. Citigroup did. It was one of the few that actually did. Morgan Stanley barely made a new high, and Goldman Sachs did not. So they couldn't get the lift, and they couldn't sustain it, and it makes me feel like, how I like my two-day move here too. We're seeing the two-day move in oil. Could we see a two-day move in financials today? I think you got some overhead supply now, as people are probably concerned that, hey, they didn't rally on that hot jobs number. What are they going to rally on?
I mean, a lot of it's already baked in. The interest rate hike, a quarter point, foregone conclusion. I know on the show we were just talking about, the numbers, the recent high of the moves, and man, Bank America got very close to it before that failed. You did say Citigroup did. Bank America only missed it. Let's see, the high of the move was 25.80. In yesterday's session, you got to 25, what is that, 79? 25.77. So just keeping an eye on, those former highs and the moves would have paid yesterday.
Also, Jamie just saying from Bright, some people call those key reversals, they call them bearish engulfing patterns on the candles. So sounds bearish to me. So I'm not a huge technical guy. I obviously use technicals as one tool in my toolbox. If you've been listening to the show for a long time, I'm more of an order flow trader. But, I like the technicals. I like to look at it. And those are some ugly candles, period, in the financials. So I'm concerned here now. And I think I'd be a seller of rallies in the financials here now. I know we were up a little bit here. Just even this morning, we were trading a bit higher on some of the financials. Now we've actually turned to the red. I know Bank of America was trading green just earlier, and it is red here now. It's kind of your leader there. JP Morgan, I've actually got a hedge on right now, JP Morgan against XLF, so I'm a little bit more short financials, but I think I'd like to I think I'm more of a seller on rallies here now, just because I think there's going to be some concern here from yesterday's trading action.
All right, we're gonna get to a few earnings.
Yeah, we got 7 minutes here. Let's jump into the disaster stock of the day, Tailored Brands. And what are you saying? This is the old Men's Warehouse / Joseph A. Bank, Joel?
Yeah.
Is that what they formed, was Tailored Brands?
Yep.
Match made in I don't know if you can say in heaven or in hell, because stock is down 28% here this morning. Stock obviously not doing something right in that earnings report. Spencer, what do they say?
What is the ticker on Tailored Brands?
TLRD. Sorry, that's my bad.
No.
I always start with the ticker. It's always written on our sheet.
Yeah, I don't know why. I knew that, but I didn't know that.
New.
I know. 19-cent loss versus a 12-cent loss estimate on the EPS. Sales of $793 versus $811 million. So they missed both those numbers. They do see their fiscal year EPS at $1.45 to $1.75. That's the range.
What was do we know what the estimates were?
I do not.
Don't have it in front of you. In any regard here, market don't lie. Stock's down 28%. It's already traded 137,000 shares this morning. It traded a ton of stock last night as well. So we always say you got to look at volume when you look at these moves. I mean, if they're trading down 28% on 1,000 shares, it's not as concerning as when they're trading on hundreds of thousands of shares. So this price discovery period has already happened. You can see the big whoosh there after the earnings report, and it's digested here for the last 2 hours of after hours and the first 4 hours of pre-market trading. So really, we've had 6.5 hours of trading here already in this range. So it looks like it's found its home where it wants to be, and that is much lower. And if I do go to my loser board of the day, this is number one, 28% down.
1576, that is your pre-market low. Now buyers have stepped up to 16 here after making that low. So I don't know, low for the day. It could be in here at 1576. Look, that takes out, man, that blows away every number we've had in this thing. Last time you were in this area, this was back 1412 low in November of 2016. This was a merger that just took forever to go through. One was going to buy each other, and it just hasn't worked out for anybody. From 66.18 down to $10 actually is what it hurt early last year. So not looking good. We'll see if you can find any support here at the pre-market low.
Did we get an official on the PPG deal? We've got Glenn Me in the chat there asking about this. Obviously, this had the huge pop yesterday on the rumors that PPG was going to get in with. Who's the foreign company that's looking at buying this?
Oxo Noble. No,
Okay.
we have a confirmation that of the offer.
Okay, so there was an offer. How much was the offer? Do we know?
The offer. Let me scroll down here for a second. I don't. Oh gosh, I don't know if there is an
actual number.
So
we know there was an offer put on the table. So PPG blasted off into orbit as this broke yesterday during the day. You can see just after 12:30, just after lunchtime, around 1 o'clock, stocks trading happily around 101, and then boom, 111. So attacks on 10 points in seconds. Obviously on the news that PPG might get acquired here. We haven't got a confirmation yet.
83 euros a share in cash.
83 euros. Oh, now we got to do some math here. So 83 euros. Where's the euro at? That doesn't sound like very much. Is that right? 83 euros? Because the euro's only trading like 105. So I only put like 105 on that. Is that right?
That's what I'm seeing.
Oh, it's like $90. Is there something else? In any regard here, stock got the big pop. But we don't have like a deal. There's no deal yet. It's still just like rumors, right?
There's no deal.
Okay, so no deal yet.
Well, it got
rejected.
rejected is what happened.
Oh, it got rejected.
Yeah.
Okay, yeah, because it was too low. I'd reject it too. If it's only 82 euros or 88 euros when you do the math. It's only like $90. What's the air math on that? 105 times what did you say? How many euros?
83.
83 times 105, Joel. What is that?
Oh man.
Come on, you won the grade 3 math contest.
I mean, you're
I don't
talking
have a calculator in front of me.
That's decimals and stuff. 113.49. Boy, things got way overdone yesterday on this news. Now there's no deal. Who knows? Dennis, you like to see if it can come back to that original area it was trading from, and that was the 101 area. So see if it comes back down.
And that's how I trade these mostly. I don't like chasing. I learned, from my 18-year trading career that when I chase stocks, I get hurt. I like them to be a consolidation. So, I had a lot of, a 100, had a lot of support back then, got the big pop here, obviously, yesterday here. But let the dust settle. Maybe people start forgetting about this. Maybe it comes back to that 100 area, and who knows? Maybe another offer still looming out there. So I always like it when they come back to the area from where they came from because they have the wild card of the stock potentially being in play all of a sudden. So that's, where I would like it is back at 100. I don't think it's going to get there for a while, but sometimes, a few weeks go by, people forget. You never know. You get those opportunities. SSYS Wave Trader wants to know about the earnings here. We'll see if we can get a couple more in before our first guest.
Sure.
SSYS is getting the beats here on their earnings report. Spencer, I'm assuming they said something not so great.
Q4 EPS 15 cents versus 5 cents, so that's good. Sales 175. Well, this is for the Q4 that already happened. $175 million versus $169 million in sales, so they had a good Q4. As far as the fiscal year goes, fiscal year adjusted EPS 19 cents to 37 cents. That's the range. 49 cents was the estimate there, so missed that. Sales 645 to 680 million dollars. 693.7 was the estimate. So they missed both the guidance numbers.
Yeah, and we know from my algorithm that guidance is more important than current earnings, and you can see here stock down 5% in the pre-market.
1840, that is your pre-market low. That coincides with another low that you had under 1850 at 1824. So look at that area as support. After you fall into that, let's see what happens of the whole number. At $18, just under that, 3 lows at the 1775 area. Did get a nice bounce off the 1840. In order to fill the gap from yesterday, reach the lower end of Wednesday's session, need to get up to 1944.
Triple D is having the sympathy move here. 3D Systems trade down about 26 cents here in the pre-market. So trade down on the SSYS earnings report. Quick technical level here on Triple D.
Man, I haven't looked at Triple D here in a long time. Let's see here. We're taking out some support at 14.5. I see a low at 14. Looks like 14.05, 14.07. on January 6th. 8:14, Spencer, what
We're
do we
going to
got
take
done?
a break now. We're going to grab our first guest today is Chris Irons. You may know him on Twitter as Quote the Raven Research, QTR Research. He's going to talk about his pretty bearish outlook for Herbalife, and they have a new there's a new film coming out about this. So he's going to outline his totally bearish view on Herbalife, and we'll be right back with Chris Irons.
One.
All right, welcome back, traders and investors. This is Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with Chris Irons from Quote the Raven Research at QTR Research on Twitter. Actually, Chris and I went to the same high school we discovered this morning. Chris, how's it going today?
It's going great. How are you, Spence? How's it going, guys?
We're doing great. We want to hear about your pretty detailed report, 25-pager yesterday you released on Herbalife. Give us over high level, what is your overall thesis on the stock?
Sure. Yeah, the thesis on the stock is severalfold. I mean, the first part is relatively easy to understand. And real quick, just before I go and start trashing Herbalife, because the first thing I just want to say is that, look, this has been I've been working on this for 3 years, 3.5 years, however long it's been. Certainly while I feel like the facts that I have brought to light and that, other short sellers have brought to light, and critics of the company have brought to light, have been extremely accurate, and those have been validated by what the FTC has found. Certainly the investment thesis has been detached from that slightly, in the sense that, the stock has kind of gone up to 80, and then it went down to 25, and then it went back to 50, and then it went to 60 and 70 on the FTC squeeze, and then it came back down to 50. And so I do want to just say up front that, it's been 3.5 years of watching the stock kind of bounce back and forth. And there's certainly been times where the stock has done nothing but go up, and I have continued to be critical of it. But having said all that, I do think now is really a time where we're going to see this perfect storm of events occur all at the same time for the company. And what I mean by that is a couple things. The first is, we have this documentary coming out. I saw yesterday, actually it was March 10th, but I thought it was March 17th. But regardless, there's a documentary coming out in 2 weeks about the company. It's going to hit, national release. It's going to be on Netflix. It's going to be everywhere. It'll be available to anybody that wants to see it. The impact of this movie, I think, is going to be far greater than anybody is discounting right now in the stock. And, I feel like I'm kind of in a unique perspective to comment on this because I saw the movie and not a lot of people have seen it yet. There's 2 cuts of the movie. There's one before the FTC decision, and there's one after the FTC decision. And the cut that I saw was prior to the FTC decision. I imagine the movie has only gotten worse since the FTC came out and completely smacked the company in their complaint, basically, bringing it right up to the line of saying the company is a pyramid scheme, but saying they rely on recruiting, which is a hallmark of a pyramid scheme, saying that they've been deceptive, which is a hallmark of a pyramid scheme, and basically just whacking the company over the head with a mallet for like 50 straight pages or however long it was. So with that included in the film, I feel like the film is going to have a very negative impact. And just a perfect example is, I've been following the story for 3.5 years. I've seen every interview and I've pretty much read every filing and everything that has to do with this entire saga. I've become a little obsessed about it, actually, admittedly. I don't know if you've noticed 15,000 tweets a day.
No. We've
anyways,
noticed. We've noticed.
Right. So I went into this movie pretty much knowing the entire situation, and not only that, knowing some of the stories that victims of the company have put forth. And I've watched some of the victim testimonials, and I've spoken to victims personally, and I really felt like I had my head wrapped around it. And by the end of the film, and really the exposition for the film, because the company didn't choose to participate, was all clips that were publicly available, CNBC, Bloomberg clips of Ackman's presentation and Michael Johnson on CNBC and all kinds of stuff that's widely available. So I knew all of that stuff going in. There was like 60 minutes of the 90 minutes in the movie that were things I had seen before. But the other 30 minutes tells this like extraordinarily gripping tale of this activist in Chicago named Julie Contreras, who is fighting on behalf of a small group of Latino immigrants who are out hundreds of thousands of dollars from participating in Herbalife. And the other 30 minutes follows this woman on her quest to try and get justice from the company or from the government, I guess, on behalf of her constituents. And so as that story starts to play out and you actually watch these Latino immigrants, and it's very, it's very serious for these people. It's very real for these people. And this is what's going to resonate with people when this film comes out. Right now, it's easy to say, all right, this is a Wall Street story, whatever. But when this gets public, widespread national distribution, this is going to resonate with the public on a very deep and very emotional level. I mean, there's a scene in this film where these Latino immigrants scrap together what they can to hire this attorney named Douglas Brooks, who has done a fantastic job representing the victims of the company. And they're in a boardroom with him, and they're meeting with him about potential strategy going forward. They're in the midst of litigation, and they're trying to receive some remuneration from the company. And they're in a boardroom together, and he's laying out their options for them. And after the meeting in the film, Mr. Brooks is about to leave the room, and they're saying their goodbyes, and they're giving each other a hug and this, that, and the other thing. And Ms. Contreras, or one of the other participants, calls the room together for a prayer. And they put Mr. Brooks in the middle of the room, and they stand around him in a circle, and they lay their hands on him, and they pray. And it was just one of the most gripping things I've ever seen.
So I want to clarify.
Victims.
I just want to clarify. The film you're referring to, Betting on Zero, is the name of the film. It's out in some theaters. Actually, I think tomorrow, but I think the wide release is not for a few weeks or a month. So, Betting on Zero is the name of the film, and I want to ask you about this FTC decision that came out last year. The FTC was investigating Herbalife, and you outlined the results of that, but a lot of that money. A lot of that fine that went back. Didn't that go back into Herbalife though? Didn't that go to people who then poured it back into the company? So,
Sure. To my understanding, and I read a couple of articles about this, that there were people that were still Herbalife participants that did receive the money, and then some of whom I'm sure turned around and poured it back into the company. And this is a perfect analogy for the indoctrination that participants in this company go through. Okay. This is not, these are not people that understand for the most part, exactly kind of how the odds are stacked against them. I'm sure there's some people that understand it. I'm not out there calling all Herbalife distributors, financially unsophisticated or anything like that, but there certainly is probably a larger portion of individuals who, if they understood how the deck was stacked against them when they were beginning to participate in a company like this as a distributor, and it was explained to them in plain English, the math behind the mechanics of the company. I don't know if you saw the John Oliver piece, but there's a point there where John Tartle, who is a current board member, tries to explain part of the compensation structure. And it's just like, he might as well be explaining the instructions on how to launch the space shuttle to Mars, because it is just, and it might as well be in Egyptian hieroglyphics, because it is impossible to understand. And it's no wonder Shane Deneen had to take some time off to rest with his family. I don't blame him, because after looking at this compensation plan for probably 2 years or however long he worked on it, your brain would turn to mashed potatoes. So what I would argue is that people that did probably incorrectly receive the money, or maybe they did receive it correctly because they had participated at some point and had still suffered a loss. But those people that took that money and put it back into the company, I would argue, it is my opinion, I'm of the belief that those people are not thinking clearly. They have been indoctrinated as a distributor. Perhaps they have gone to one too many extravaganzas. I mean, you think about the notion of one of these extravaganzas. They get a football stadium and they fill it with 50,000 people, okay? And then they start blaring loud dance music and they have people on stage, dancing and giving their testimonials, talking about how they've made millions of dollars. Okay, the CEO of the public company comes out on stage with like pyrotechnics and he walks up to the front of the crowd and he's signing autographs like he's Bon Jovi. I mean, it is the most ridiculous thing. I mean, if the CEO of Coca-Cola came out to a conference tomorrow in front of 10,000, Coke fans, 10,000 people that love drinking Coca-Cola, and they paraded the CEO out on stage, and he was signing autographs for people. We love the product. Can we have your autograph, please? I drink 2 Cokes a day. I imagine Warren Buffett would probably be in the front row. We would turn around and go, this is the most ridiculous thing we've ever seen. But that's part of the indoctrination process with this company. And that's why it doesn't surprise me that people who may have suffered a loss may have turned around and poured the money back into the company. It's like the sunk cost fallacy.
All right. So that's your thoughts on the company. I want to ask you now your thoughts on the stock. We know Carl Icahn, 14.7% stake, 22.5 million shares. He's the largest shareholder in the company. What do you think about the stock now?
Well, look, I think the stock is overvalued. I mean, I made it very clear in my report. I mean, the company taking on more leverage right now for whatever they intend on using it for, whether they're going to buy Carl out of his position or they're going to just sit on that money as a war chest, which is another theory that I put in my report yesterday, doesn't really matter. When the fundamentals of the company are declining, and I would encourage everybody to take a look at the report that I put up yesterday. Maybe Benzinga, I think actually Benzinga wrote an article about it that links to it. So you can go to benzinga.com and you can find it through there. But when the fundamentals of the company are in real decline, and that's what we're seeing. By the way, analysts covering this company like Tim Ramey, okay, who I know we reached out to and would not join me here on the show. I wanted very much to debate him publicly, but for some reason, it doesn't seem like it's going to happen. Analysts like Tim Ramey had estimates on this company for 2017, 2018. If you go back to 2013, 2012, when this whole thing first started, the company was supposed to be doing $7 or $8 a year in EPS now, okay? And those estimates have fallen dramatically. And they have fallen dramatically not only because sunlight has been cast upon the company, and now the truth is starting to run free, but also because the fundamentals of the business, which rely generally around recruitment, are starting to fail, and they're starting to taper off. We saw this last quarter. China, which is the company's biggest growth market, okay, was down double-digit percentages year over year for the fourth quarter. Excuse me, I'm sorry, my phone's just breaking up a little bit. China's down double-digit percentages quarter over quarter for the year over year for the fourth quarter, and that's supposed to be their largest growth market. And so we're seeing real stagnation and real reversal of trends in the business now. The company's free cash flow is starting to decline materially. God help you if you actually go and take all of the add backs that the company has put into their adjusted EPS number and start to consider them in your analysis. I mean, I would like people to go out and just do an analysis on the GAAP numbers. I don't know if you guys remember generally accepted accounting principles. That's how companies used to report earnings. That's how people used to talk about finance. Now it's kind of like, grab a number out of your ass and make that your earnings number, and that's kind of how it happens. But
Chris, Dennis Dick, we only got about a minute left with you here. I'm getting a few
Sure.
people from the chat, and I have a similar question here as well. What about the products they sell themselves? Like, so, okay, it might be set up, as a pyramid, but are the products any good that they sell themselves? Like, they have this weight management, they've got some shakes, they've got some stuff. How is it different than, like, stuff that you just get at, like, GNC?
Well, here's a funny story, okay? And this is probably a good note to leave you on, and I've never really written about this. So I used to live in Philadelphia, okay? And when I lived in Philadelphia, I worked at an Irish pub downtown. And one day, a gentleman came in named Carlos Ruiz, who is a former soccer player for the Philadelphia Union. And he's the Guatemalan national soccer captain, and super nice guy. And I recognized him because I follow soccer and befriended him. He had moved into the apartment next to the pub where I worked at. So he came in to get a chicken marsala sandwich, and which, by the way, was my expertise before finance, mostly just sandwiches and beer. But anyways, he came in, and we struck up a friendship. So at one point, he was moving the rest of his stuff from, I think he was playing in LA prior, to Philadelphia, and I was helping him move one day. And as we were moving things into his new apartment in Philadelphia, he had an enormous box of Herbalife branded products. Huge box, like a moving box full of products. The shakes, the powders, the proteins, the energy pills, this, that, and the other thing. And this was like 2007 or 2008. I can't really remember. I think it was 2008. But before I had kind of gone on my quest about Herbalife. So he looks at me and he asked me if I want to take this stuff with me. He said, I don't want this stuff. Do you want it? I guess he got it because maybe the Galaxy was sponsored by them, or because and I'm hopefully I'm not blowing up Carlos's spot, but I think his legacy in Guatemala is going to trump anything that I say on an internet streaming radio service. So he hands me this box of products, and I take it home in 2008. And I wake up one morning and I get ready to go for a run. And I don't have any coffee in the house, so I like to have a nice coffee before I run. And so I start going through this box of crap that he's given me, and everything's expired, and it's all, So I try these Lift-Off energy drink pills, and I actually, they're a little tablet. You drop it in water, and you shake it up, and it's supposed to make you like a Red Bull. Well, it was not a Red Bull. I can say that. It was the first and last Herbalife product that I used. But the products are commodity products. You can get them anywhere. There's no difference between going to GNC. For the most part, there's no material difference between going to GNC and getting a canister of Lean Shake than there is going to Herbalife and getting a tub of protein powder, their Formula One powder. The only difference is you're going to pay a ridiculous markup on the Herbalife product because they have this convoluted scheme where if, Spencer, I come to you and buy a thing of Formula One protein powder, which is widely available on eBay and basically anywhere, that you then have to give $1 of that to somebody else and 50 cents to somebody else and this, that, and the other thing. I mean, they are all commodity products. I don't think there is, in my opinion, there's nothing at all that differentiates these products or puts them even on a par with a lot of the products that are out there. The company is touting this seed to feed initiative now, where, okay, we're going to get fields, we're going to grow the seeds, we're going to, there's one of two things can happen from that. It's going to be an enormous research and development cost, and it's going to increase costs for the company at a time when they absolutely can't, do that. Or they're going to make a lot of press about it, and they're not actually going to do anything. So, they're either going to have to pay the cost to improve the quality of their product, which I don't think they can do at a time like this, or they're just not going to be able to do it. And it'll be another thing that they come out and say, but really when you, as they would say in My Cousin Vinny, when you turn the facts sideways, they're as thin as this playing card, right? It's kind of just a smoke and mirrors show, I think.
Chris Irons is our guest. Quote the Raven Research. You say in your report that the Perfect Storm could send shares under $30 for Herbalife. So that's the number that you outline in your report, Chris. Thanks a lot today for coming on. Thanks for outlining the thesis, and we'll talk to you again soon.
No problem. Hey, if you ever have another 7 to 24 hours to talk about Herbalife, I'd be more than happy to come on and get me John Hempton or get me Tim Ramey to speak with. I'd love to have a spirited discussion with them.
We will do our best, Chris. Thanks a lot. All right, that was one of our more what's what I'm looking for? I mean, that was a good interview.
Lively.
Tell us how you really feel.
No, that was a good interview. That was
Sugarcoat it, I'll tell you that.
He was lively. Yes. No, that was good.
Doesn't make you want to go out and buy Herbalife stock, that's for sure.
Yeah, but lively is the word there.
Passionate, coming from Wave Trader. Excellent job, Spencer. Way to go.
I mean, Ackman must gonna love this segment. You know, we should send this to Bill Ackman. He'll come on right after this.
We're trying to get Ackman.
Yeah,
so
we're trying to get.
He's
Bill
gonna
in.
love this segment. So
All right.
I don't know if Uncle Carl's gonna like it that much, but Bill Ackman will love this segment.
All right, it's 8:35 now. We're gonna break for our final guest of the day. Chris White is the founder and CEO of a company called Edge Raider. They develop trading tools. They're based out of Seattle. So we'll be right back now with our second Chris of the day, Chris White.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel L. Condon, along with Spencer Israel and Dennis Dick. Chris White is on the phone. He's the founder and CEO of Edge Raider. Chris, how you doing today?
I'm doing great. It's a great time, 5:30 in the morning in Seattle. Thanks for having me on your show.
Okay, all right. Now, we ran into you at the Traders Expo here, and you have a product. Before we get into the Edge Raider, which I have up on the screen, give us a little bit of your background and what was your motivation for starting the company?
Yeah, so I've always been a software developer, and I think a lot of software developers are interested in the markets too. But I first started to get interested in trading back in the .com bubble, and obviously that was not. I got in at the wrong time there. First trade was a great trade, but then after that, that was really the top of the market. So things weren't working for the next couple of years. But our company was bought by Microsoft. We're a small company based in Vancouver, Canada, and they moved us all down here to Seattle. And then about 5 years after we were bought, I got interested again back in the markets. And one of the things I was looking at stocks that were like in the top gainers for the day. And I would put them in a spreadsheet and I would look at them day by day. And to me, it seemed that the stocks would appear over and over again over a period of several days. And I thought there could be an edge in trading that. But there wasn't really a good way for me to test that. The software that was out there didn't really work for me. So I put together a little program that did a comparative analysis to find the top gainers for the day. Obviously, to do that, you need to look at all of the stocks and all of their gains for the day and compare them against each other to come up with a list. And I found there was an edge. Actually, if you traded those stocks at the close of the day and held them overnight and sold them the next morning, there was actually a pretty good edge in that trade. The edge turned really bad if you held it for the whole day and sold it at the close of the following day. So that was kind of an interesting piece for me, and that's kind of how I got started with the software.
All right, so let's talk about you got a few different products here. We can maybe highlight one of those and tell us about the templates that are created. Which product do you want me to click on here? The first one, Edge Raider Pro?
Yeah, Edge Radar Pro is really the flagship product, and that's what I work on daily.
Okay.
And it is, as I say, it sort of originated from this idea of this backtesting of comparative analysis, but it's grown over the years, and I've been working with a few successful traders to put templates into the system. And templates are really sort of encapsulate somebody's trading methodology or ideas. They can be very unique. Templates can be really unique and do things such as group rotation reports. Percent B buckets analysis is one of the popular things that we do. There's ways of producing correlation matrices and getting your correlation alpha, beta, and correlation number. But there are also very simple templates in terms of that are just scanning type templates. So we can do scanning for things like squeeze, breakouts from squeeze, what's working right now, what's in play, what has had. A popular one that I came out with recently was called the Someone Knows Something template. And what it does is it looks back at things that are in a squeeze, low volatility, and they have periods of volume coming in, but it doesn't really move price, but you get these really sharp increases in volume. And what you'll find is after a while, you don't really know when it's going to happen, but after a while, those things will move very, very quickly, either up or down. But it's always good to have those on your radar. So that was a new one. One of the really cool ones is the annual trends template, and that's really to do with things that move at a certain time of year. You might know it as seasonality. I think a lot of people call it seasonality. And I just ran that before coming on with you just now to come up with something interesting. And it looks like Starbucks, for instance, this time of year has a 7% gain 9 out of the last 10 years for over the next period of the next couple of weeks. But that kind of thing is what we can do within some templates. So I have some really unique templates, and I can go into one or two of those if you're interested.
Chris, what's this 3D scanning? Can you just jump into, I'm just looking at your products there as well. What is 3D scanning? Tell us about this, and what does it do?
Yeah, no, sure. That was a term I came up with because I couldn't really, I didn't really just want to have it's not really just a scanning product. Scanning will tell you things that are meeting certain technical criteria today,
yes.
Which is great. 3D scanning will tell you the thing. So if you run, say, an example would be, show me everything that's crossed above upper Bollinger Band. And a normal scanning tool will tell you everything that crossed above the upper Bollinger Band today. 3D scanning will go back through the whole history of your data and show you all day by day in various columns as things have crossed above. So, so you get this 3D view, not just this simple what's happened today.
And that could jump to probably your back. What about your back testing product?
Yeah, so it's the same product. It's Edge Radar Pro.
It's all part of the Edge Radar Pro, right?
It's all built right in. Yes, you have that product, and you have all of the back testing and the templates and everything I do. But the back testing works exactly like that. It uses the 3D scanning, the events that are generated on a daily basis, and then you sort of just put them into a trade simulation and put your parameters in when you want to buy, what sort of stops you're looking for profit stops and stop losses, and run that, and it will give you end up with a bunch of reports based on the trade list that's generated.
And you mentioned a conversation yesterday that there's different templates, but you have some canned strategies, some book strategies in there. Could you give us a look into a couple of the, pre-designed strategies that you have in there?
Sure. So when I first started with the program and doing the back testing, I found that a lot of people didn't want to write their own scripts. That's not something that normal people do. So I did a little research into there's books available, publicly available information. So I did some research into some strategies, and I found that one of the really, really profitable ones in both the long and short side was something called high probability ETF trading. And there are 7 strategies within that group of strategies, essentially, they are reversion to the mean type things. So they look for big sell-offs and then reverting over the next 4 or 5 days. And they, year after year, are very profitable. The most profitable one of those has about an 80% success rate, win rate year after year. You run it for any period of time, and it will have an 80% success rate. Not great gains, you're talking from anywhere from 0.5 to 1%, but you've got a lot of winners versus losers in that strategy. And so what I did with that was separate that out into a completely separate, you run it, you press a button, and you'll get signals for buy, sell, and hold. And that product is called the ETF Trading Bandit. So I have that for sale. They're the only 2 products that I currently have. But again, the strategies that are in that ETF Trading Bandit are also included within the EdgeRater Pro Unleashed. So that's the big sort of flagship product that I have and I work on. And yeah.
And tell us about the pricing here and, how people can get a trial or get more information. I got the website up here, but talk to us a little bit about the pricing.
Yeah, so edgerator.com is the website, and if you go there, you'll find you'll find information about that. But the pricing is you could either do a month-to-month pricing. Most people I find prefer to actually buy the program outright. It's $19.97, so $1,997. But it's a product that you download to your PC. You keep it forever. You can use it for life. The data comes free from the internet, so you get free end-of-day data. So there are no other charges once you have the software, and you actually don't need to be connected to the internet. That's why it's called Unleashed, to run the program. Obviously, you need to connect to the internet to get the data, but once you have the data downloaded, you can be on a plane and be doing all kinds of testing and looking at signals and that kind of thing. So that's $19.97. The ETF Trading Bandit is $497, and that includes actually an intraday update capability. EdgeRater Pro Unleashed has that intraday update capability as well. And what that is at any point during the day, you can hit a button and it will go and fetch the latest data. And it will give you an open, high, low, close that will then become your essentially pseudo end-of-day bar. And you can do a whole bunch of scanning and calculations on that bar. But one thing that I'm having this coming weekend, is I'm doing a webinar. It's going to be on Saturday morning at noon Eastern time. And I'm just going to go through some of the unique templates in the program and show how people can use those. So if people were interested in the product, come along and join us in that webinar. I think it's going to be a good one.
Sounds good. Chris White, founder and CEO of EdgeRater. Thanks again. We'll talk to you again soon.
Great. Thanks, guys.
Thanks, Chris.
All right, 13 minutes left here. S&Ps are climbing back here, only down $1 here now at 20.
That's SPY's green. Here we are again. We're fighting each other. And people, why does that happen? Well, the S&Ps close at a different time than the actual SPY. SPY's a nickel in the green. SPY closes right at 4 with the equities. That's why I like the SPY now.
And just remember, folks, we're trading the June ESM on your machine now. I'm still doing my levels on the March contract, but the front month now will be June in the S&P futures contracts.
Let's jump over into some of the imbalances here, just to give you a few of those before we jump into some more earnings plays. Caterpillar, 53,000 to sell. The selling pressure does continue in the CAT. It got hit again a little bit yesterday as well. So CAT trading down slightly here in the pre-market on a big sell bounce, $92.90. Other ones, they're all pretty small. What do you think, Twitter, here? I mean, I'm it did have the little green candle yesterday. Finally gets a little green candle. Bounces off to 15. Ace talked about the 15 level yesterday. We got down to 15.08. It's been down for a while here. I think it's due for a bounce. I just don't still love the valuation on this thing.
It might give you another shot there. You had a low at 15.16 on Tuesday, 15.08 on Wednesday. So, if you're pulling the trigger here, you give yourself a little room, perhaps under 15, probably some large institutional bids there. But where's the catalyst, Dennis? Where, what, a rumor, and I know, of a potential buyout. You can see That hasn't done much for shareholders, so I'm just trying to identify a catalyst and don't have one right now. But technicals, you did come down to 15 back last June and you had a nice bounce. But not much happening today in Twitter. Trading a little bit up now, trading flat here in the pre-market, 15.24 close.
Had the snapback rally in Snap yesterday. I think thanks to Tepper, they were calling it, because Tepper had actually said that he had bought it on the IPO, and he actually said he sold some stock, but I think he still was hinting that he still owns some stock here. And he said he would be a buyer if it got back to that price. Was the IPO 17? Is that what the actual IPO pricing was? I forget.
Yes.
Yep.
Yeah, so Tepper said he'd be a buyer back if it got back to that level as well, but it was a valuation issue still for him. But, I mean, let's be honest here. Who's not buying this on the IPO if they're getting shares at 17? It's basically free money. Stock opens at 24, and he turns around and sells it for the free money. It's just the advantage of, obviously being a big hedge fund manager. You're going to get some of that stock on the IPO, and it's probably going to pop at least for the next day or two. So why not, take advantage of that and buy those shares? I mean, if I could get the shares at 17 on the IPO, I would have did it too and been selling at 24, 25, all the way up to 29. So here we are, though. The stock's now at $23. And he didn't sound that bullish to me when he was interviewed there on CNBC. Like, it said, okay, yeah, gets back to 17. I kind of like it. My kids like it and stuff. But he didn't really sound that bullish to me for the stock to be popping yesterday.
All right, some stocks out of the chat here.
Let's start with Elf actually.
Okay.
Yeah, so Elf is up about 19% today. They had earnings and a good guidance beat. Dennis, you were saying you thought it was Elf on the Shelf. It's not Elf on the Shelf. It's Elf Beauty. It's Elf Beauty. The earnings, the numbers were fine. The EPS was in line, and the sales beat by $2 million about. But the guidance is what's driving this baby up this morning. They said fiscal year 17 sales at $285 to $295 million. $281 was the estimate. The EPS of 40 cents to 43 cents is the range. 37 cents was the estimate, so better than expected on both the EPS and the sales for the fiscal year 17.
It's a big pop, 19%. You go from almost your 52-week low up to almost your 52-week high, really, on this thing here. I guess we don't even have 52 weeks of data there because it hasn't been out that long. So almost your entire. I mean, this thing on this first day of trading back in September was 23.73. It got up to 32.54. And what is the range here after hours, Joel? It's got to be like 90% of that.
Yeah, we went
of the
up.
entire range that this thing is traded. There's got to be some overhead resistance up there, 31 to 32. No?
30.99. That marks your pre-market high. You did get a little in the 30 handle before. 30.56 on January 9th, so that's the high for the year. We've backed off. Man, getting a lot of those losses back. I mean, I'll be keying on the pre-market high. The fact that we pulled back 70 cents from that level, I think you might see sellers if you try and make another run back up at that. As Dennis mentioned, the all-time high in ELF, 32.54. Speaking of beauty products here, Ulta is due to report, I think, after the close. Man, this stock has just been
Is this an all-time high for Ulta?
Isn't Ulta always at an all-time high or very near it? Your Ulta has just been a monster.
I don't know what happened on Monday. This thing went to 281.17. I don't know if that was a fat finger on an open or something, but they've blown away the report several times, so it's hard to bet against it. 270 looks like good support. 281.17, the all-time high.
I mean, you look at the monthlies on this thing, and this has got to be one of the biggest moves, from 2010. It was $18 in 2010. The stock has, basically from that, what is that, $275? You're talking about stocks up like 1,500% in the last 6 years. That's the definition of chasing to me. I mean, this thing has been the monster move. I think the easy money has been made in ULTA. But am I coming in here shorting it? I mean, every time if you were thinking, the easy money's been made, the thing just continues to rise. So here it is at 274. Gonna report here tonight. I'm hands off on this thing just because it's what's the Nick Shaheen saying there, Joel, that I always mess up?
Too hot to chase.
Too high to buy, too hot to short. Right?
I think Joel messed it up.
Okay. Go ahead, Spencer.
I don't know.
I'm sorry.
We always get it wrong. I got to write that down, just have it here, because I say it all the time on the show. I say it wrong every single time. So in any regard here, I'm out. I'm out on ULTA.
All right, 8:54 here. We just got a few more minutes. Much in ratings land today.
No, ratings land is pretty quiet. You did get a couple notes. Mizuho looks like they're bearish. A whole bunch of retailers. A lot of the shoe ones here. DSW, they are downgrading here this morning. Finish Line, they are downgrading as well. FINL, and then Guess, they're also downgrading GES, I believe, to underperform. And Guess is just an ugly chart. I mean, we know the apparel retailers have been hurting here, but this thing's sitting on a cliff. If it ever takes out the lows around $12, I mean, you had multiple lows, right? 1188, 1187. You start to take that out again. I mean, this thing is just ugly.
All right, and let's see here. What I just want to check on Nike. I haven't looked at that stock in a while.
Count back. Nike's a funny stock, and it doesn't trade with the other. It's like its own animal a little bit. But in the last, let's say the last year, really, you can go to the weekly, even the last 2 years, it's kind of been range bound between like $50 and in the mid 60s. And every time it gets up in the mid 60s, it seems to find sellers. Every time it gets in the lower 50s, it seems to find buyers. It seems to be the case here again. Even recently, the stock got down just under $50, and then it finds buyers once again, forms a support, forms a base, and starts the slow, steady climb. Probably climbing back to that 60 area where it finds resistance. So I feel like the stock is just, a long-term range bound here between like 50 and 60.
All right, and Under Armour, that I saw that thing continuing to make new lows on the move.
That's scary.
Yeah, UAA 1911 closed right on the low tick there after we've taken out 20. So no bounce in that. Shop SHOP. Let me pull up the chart on that and see if we have any news or earnings on that. Ooh, that's
And earnings yesterday morning.
Yesterday morning. Let's see here.
Oh, I'm sorry. No, we didn't. We had earnings like a month ago. Why did I say that? We had earnings like a month ago.
I mean, nice looking chart here. You had the run up to 64.36, a little bit of pullback, rounding bottom there.
Yeah.
Moving up. I mean, you know where you're
Trend's
out
your
here.
friend.
Yep. Your trend is your friend in that one. And what else? I wanted to bring up this stock, CARA. I've been watching this thing. I think they have earnings after the close. This is a biotech that just is not acting like a biotech. I've been watching this thing in 2017. 1944, it hit a couple days ago, finding some major support at 17. But, man, they got to either have some good earnings or having something good in the pipeline.
I don't know much about this company either, but again, trend is your friend here too. And you're right. You think about all the drug stocks have been under pressure, the biotechs especially here. And here's a stock that's actually performed quite well. I mean, really, since 2016, the stocks went from $5 to 17. Now is a little bit lofty if you're thinking about, coming in, entering here now from a longer term perspective, maybe. But trend is still your friend. I mean, draw your line up there, watch your moving averages. And if it's still trading above there, I guess you still play from the long side.
Habitat Restaurants took a hit a couple days ago, but you got
What's symbol on that?
HABT?
Habitat or Habit? Habit Restaurants.
Habit Rat. Okay, I got
Habitat,
that.
Habit.
Yep.
It's all good. HABT is the stock we're talking about.
Double bottom 1450 after that disastrous day. There's a gap to protect between 1450 and 14 even, but at least you got a double bottom to lean on. Coming back up over 16, you can see that 4-day high. Last stock of the day will be Pepsi, and man, we haven't talked about Pepsi or Coke in a while. Let's see how the chart looks. Hanging up near an all-time high. Bad day yesterday. I'd say major support here at 108. That was a low that you had back in mid-February. And having trouble in the 110 handle. But the Pepsi chart looks a lot better than the Coke chart, huh, Dennis?
Yeah, well, Pepsi's very near all-time high. So, a little bit different business model than Coke. I know a lot of people like to pair trade Coke and Pepsi together. Coke is, a little bit different in their business model. But anyways, Coke, dividend 3.5%. Pepsi's a little bit less, 2.75%. There's been a little bit more growth with Pepsi, so you still have some growth-oriented investors trading along in that, where it's all value investors in Coke. I think Warren Buffett owns almost a big chunk of Coke, obviously, there. But, one thing to consider here is if interest rates are rising, stocks like Coke don't do well in that type of environment. Pepsi, it's kind of similar. A lot of people still in it for the dividend. The higher dividend stuff, if interest rates do start to rise, can sometimes struggle there. And here's a stock near all-time highs. I don't know if I want to own Pepsi up here.
All right, S&P's battling back here, up 75. Maybe Mr. Draghi's making some comments here to drive the market up. Now up a point, over 6 points off the low, keeping an eye on that pre-market high of 66.75. After that, you don't get much into the 23.70 handle. A couple highs from Monday, Tuesday, and Wednesday there. All right, Spencer, 8:59. You want to wrap things up and preview the final show of the week.
But I think we forgot Sears Holdings, which they reported this morning, but they.
Can't forget Sears.
Yeah. Well, okay. I mean, I was half kidding. They did actually report, but their report is what it usually is. They lost money, and so that's I don't know. I just wanted to mention it, but
Well, they lost money. It goes up.
yeah. Well,
They didn't lose enough money for the shorts.
Well, no. Well, they beat the estimate on the EPS and the sales actually, so they beat both numbers. But I don't know. Okay, I just wanted to bring that up. On tomorrow's show, we got a pair of guests for you. We have Michael Carvin. He works for Smart Asset. They're a personal finance fintech company, and then also we're going to be joined by the Raven Capitalist, Paul Majanovich. So always love having Paul on the show, so looking forward to both those guys tomorrow. Hope you enjoyed our show today and our chats with Chris Irons, a.k.a. Quote the Raven Research, and Chris White. If you want to catch the whole show again, you can do that on YouTube right now or on our podcast. We're on iTunes, SoundCloud, and Stitcher. Just search for PreMarket. Please remember that all the information and material from the show is for informational purposes only and not meant to be investing advice. Have a good rest of your day, everyone. We'll be back with you folks on Friday for our last show of the week.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.